joined today by Sam Budiselik, CEO and Managing Director of Cash Converters.
Hi,
Sam,
Dave.
thanks for your time.
Yeah, thank you.
People who know Cash Converters think bricks and mortar, a bricks and mortar business that's gone exceptionally well. How do you build growth into a business like Cash Converters?
That's a good question, David. I mean, the business has been around for 40 years. A lot of people have heard of Cashies, wandered into a store, maybe sold an item, had an experience in store, and that's still an important part of our business. But I think in the last 10 years in particular, the business has really changed. It's become a big personal finance operation, supporting customers that a lot of other people won't. And there's a lot of people in Australia that rely on that part of the non-bank lending market. So, the network started with that franchise store model, got the stores out, people became aware of the services, and that operates like a broker network now really for a lot of our customers who can come in and deal with a finance expert and receive some help with a challenge in life.
And do you look at buying back the franchise stores?
Yeah, we do, because the network over time is a profitable operation, and a lot of those franchisees have been in the network for a long time, you can imagine, over 40 years. So there are life events, there are retirements, some of the businesses are passed down generations, and some of the owners look to sell. For us, it's a good way to deploy capital. It's a low risk way for us to acquire the earnings of that franchise operation and fold into our corporate infrastructure. So of the 150 stores in Australia, we own about half of them corporately now and operate them as a corporate owner, and half are still franchised. So definitely an opportunity there.
And the personal finance element of the business, scaling up through tech.
Yeah, I mean, that's the only way, I think, in this part of the economy that you can do this well. So you need a lot of data to really understand this part of the economy and how customers are behaving. As a bank, I think if you're going in for a mortgage, and the bank would likely pull your credit file and have a look at your banking history, and you might have sort of regular employment. Our customers are very different, so a lot don't have a credit profile. Bank statement analysis is a lot of transactions, small value. We need to categorise that, really understand the position of that borrower. Can they afford the loan? Is it suitable? What do they need that loan for, and can they repay that loan? So the only way we can build our credit risk models and our responsible lending approach is to have really sophisticated technology. That's probably the part of the Cashy story that's not that well understood, and that's why we're here at TechKnow, to really bring that to life and talk about that.
But a key part of the business where a lot of growth is going to come from.
Yeah, it's about 2/3 of our earnings now, that finance business. So I think the challenge for people in life is accessing regulated credit in a safe way, and we do that, we think, the best in our part of the market, and that's described as subprime. It's a credit score below about 500 for people that follow that. But that's really where we operate when we do that well, and we're the biggest provider in that market and the only listed provider in that part of the market.
And what does the future look like? Where's the growth going to come from for Cash Converters?
Yeah, we still see our store network expanding. We're at 150 stores in Australia. That could probably go to about 200 as we reach new consumers. We've got new product releases happening. We've had a big product mix change, so we're really working hard to innovate lower borrowing costs through our credit models. We're confident now we can build an accurate position on the borrower, so we can lower cost in certain instances. And offshore, so we recently acquired 40 of our UK stores out of 200. That's now a corporate operation in the UK, similar to Australia. We'll keep acquiring those franchise stores in the UK too. So some international growth opportunities, local domestic acquisition opportunities, and organic loan book growth.
And importantly for investors, a dividend-paying stock.
Yeah, I mean, that's in this sort of part of the market, it could be considered unique. But, really big business, 380 odd million of revenue we've turned over this year, and we've got about 50 mil of cash on our balance sheet that we're investing sensibly, slowly. We're not a company out looking to raise capital to go and do anything too, explorative. We're sensibly operating the business and growing it. And as a result, we generate a net profit. We've paid a 2-cent dividend per year for the last 3 years. It's a 10% yield, coming with fully franked. So, we're operating the business for a sustainable future in a profitable way.
And where to from here? What should investors be focusing on from Cash Converters?
Yeah, I think Cash Converters is going to be a beneficiary of a growing market segment in Australia. People are struggling, cost of living's increasing, and the banks are really pulling back in terms of what they're prepared to risk. And our technology puts us as an industry leader feeding into this part of the market and supporting a growing part of the market. You know, I've seen estimates around 3 million Australians struggle to get finance. We've got 100,000 active borrowers just in our business alone borrowing with us. So, you know, growing market share, expanding network, and that global growth opportunity is a sensible one that we settled about 12 months ago. Has gone really well. So we see our overall market growing.
A strong bricks and mortar business with global footprint, but using tech to drive growth. Exciting times ahead for Cash Converters and its shareholders. Sam, thanks for your time.
Thank you, David. Nice to see you.